Syndication can be a powerful real estate investing tool, and there's a huge reason why it's so popular. Billions and billions of dollars of investor capital are raised and deployed through the syndication model. But whenever there's pros, there's also cons. So in this video, I'm going to walk you through the pros of real estate syndication, but also the cons. And if you're just meeting me for the first time, my name's Seth Ferguson. I'm a 16-year real estate veteran, CEO of CPI Capital, which is a real estate investment firm. Really glad you're joining me. So I'm going to be breaking down the pros of real estate syndication and cons of real estate syndication. So I'm feeling positive today. So let's start with the positives, the pros of investing in a real estate syndication. Let me just write pros right here. Okay, so pro number one, it's passive investing. So let me give you an example, because a lot of people, especially when they're first getting started in the real estate investing space, they have the wrong idea about what true passive investing means. For example, let's say you and I are going to acquire a duplex. One person's going to swing the hammer, one person's going to finance it. In that type of structure, that 50-50 structure that's very common in those situations, that's not passive. Even if you're just writing the check for that duplex deal, you're still 100% liable for everything that happens. And if the deal goes south, if something goes sour, you have unlimited risk in that situation. Now, with syndication, if you're the passive investor, if you're the money person, if you're investing your capital in a syndication, you're actually protected under the law from that. You're actually protected under the law from that unlimited risk, and that's why it's called a limited partnership in the syndication structure. Your risk is limited to just your initial investment, and that's why a lot of high net worth individuals and business owners, doctors, programmers, accountants, you name it. That's why they really like investing through the syndication structure, because it gives you the other benefits I'm going to talk about, but also it gives you that true passive investing. It's very much passive. It's you're investing your capital, but you're not assuming all of that unlimited risk. The second pro is cash flow. And I'll just write scale here as well. So when I first started investing in real estate, I was investing in single family homes, duplex conversion, that type of stuff. And the thing I found was there's not that much cash flow going on, and cash flow makes the world go round. You need cash flow to be able to sustain the property, to cover repairs. Just to give you an example, when I first started out, there was a drain out to the sewer of one of these duplexes, and a tree root busted through it. That repair cost like $8,000 to fix. Now, with that type of duplex and deal, that was like 2 years of positive cash flow that poof went up in smoke on day one. Because the scale, you only have 2 units. But when you're dealing with multifamily, when you're dealing with apartment buildings, you've got 50, 100, 200, 500 units all on one property. So all of a sudden, if something happens, that's the cost of doing business. Same with a triplex. You have 3 units in a house. One tenant moves out, that's 33% of your revenue gone. A duplex, 2 units, 50% of your revenue gone overnight when you have vacancy. With a 100-unit apartment building, you've got 5 units vacant. That's a cost of doing business, and that's expected. So the scale, the economies of scale actually work in your favor when you're investing in a syndication, as opposed to buying a duplex property. Because I was there, it's in my opinion, it's far better to get a smaller piece of a bigger deal, because the cash flow is going to be there. It's going to be a lot more stable. There's a lot more scalability factors that actually work out to your benefit. Now, the third benefit of the syndication structure is actually the tax benefits. So what this allows you to do with these larger apartment building deals is we run something called a cost segregation study. So basically what we're doing is we are front loading depreciation. So instead of waiting 39 years to get all of the tax credits that we're eligible for, we can run one of these cost segregation studies and front load that. And what does that do? That actually puts more valuable dollars in our investors' pockets today rather than having to wait and stretch that out over 39 years. Because a dollar today is worth far more than a dollar in 5 years, 10 years, 20 years, 30 years, 39 years. So what we do is we actually use the tax code to our advantage, front load all of that depreciation, allow our investors to keep more money in their pocket, which is more valuable dollars today. And then those investors can use those saved dollars to invest in other opportunities. There's opportunity costs there as well. So that they can deploy that money rather than sitting on their hands, waiting for all of those tax credits to come in over that 39-year period. I've got other videos on this channel where I go into a lot more depth and a lot more detail specifically about tax credits, depreciation, and cost segregation. And so those are the three pros. We got true passive investing, right? True passive investing, where you have those protections because of the syndication structure. We have cash flow and scale. So the cash flow is a lot stronger with an apartment building than it is with a single family home, something like that. And you have the scalability. And then also the tax benefits that come from investing in a multifamily syndication. And then you also run that cost segregation study. So now let's talk about the cons, because whenever there's pros, there are definitely cons. And these are things that you have to be aware of if you're possibly considering investing in a real estate syndication. So the first con I want to cover is control. Because what happens is when you invest in a syndication, you're passive, 100% passive. That's why you get those protections that protect you and limit your risk in the investment. But with that, somebody else is actually running the deal. So in our example, what happens is our investors, they make up something called the LP, the limited partnership. But then there's us on our side. We're the real estate experts. We've got the deal flow. We have the connections. We know how to manage the properties. We know how to fund these. We know exactly the business plan we're going to use. We know how to make money in real estate. So our investors invest their funds through the syndication structure, and our team, the GP, the sponsor of the deal, the real estate experts, we actually deploy that capital and manage the deal. So if you're somebody who wants to swing every single hammer, if they want to know every single tenant by name, if they want to call all the shots and actually manage the asset, well, syndication is not for you, because that's not what it's designed for. Syndication is designed to raise money very efficiently from passive investors who don't want to do the day-to-day type of stuff, who don't want to be swinging hammers. And then that money can be deployed into a deal by the sponsor. So if you're looking for complete, utter control, where you want to decide when to raise rents, exactly how to raise them, you don't want somebody whose full-time job that is making those decisions, well, syndication is not for you because you don't have that level of control. Syndication is good if you're looking for those passive investment opportunities where you're collecting those checks every single month from the investment. You want somebody else to run that for you, somebody who's working full-time in real estate, and you just want to enjoy the benefits of investing in real estate, the cash flow, the stability, and then also the tax benefits through depreciation. Okay, so that's con number one. Con number two, it's illiquid. Now, this can also be a pro depending on who you talk about. But real estate, especially syndication by its very nature, is illiquid. What does that mean? That means your money is tied up for a long period of time. This isn't where you come in and then you exit within a month or 2 months, or even 6 months. Syndication, typically you're looking at 3, 4, 5, 8, 9, 10 years on a deal. And on the con side, if you're somebody who needs access to that money right away, syndication is probably not for you. Because with the syndication, you're investing your capital, you're expecting that money to be in the deal for a long period of time. That's going to depend on the type of deal and the business plan, but it's going to be a long period of time. And generally speaking, you're not going to be able to extract that money if you need it for a rainy day. So when you're investing in the syndication, the positive of this is, if there's ups and downs in the market, you can't make those knee-jerk reactions like you do with the stock market. Something happens, sell right away. Real estate, it's a longer hold. The market acts a lot slower, and it's time in the market. So if you're somebody who wants to just put their money in a deal, the deal fundamentals are solid, the business plan is solid, the team solid, and you want to have your money in that deal for a longer period, syndication, perfect. If you're looking to come in and out, do some day trading, have your money liquid after 6 months, syndication's not for you. It's not that type of investment. Your money's going in for a long period of time. And basically what we tell all of our investors is, hey, your money comes in, think of it as locked in a safe for the next 5 years, because that's really what's going on. Okay. Third con is prerequisites. And what I mean by that is there are certain things that have to happen for you to be able to invest in a real estate syndication. So you've probably heard the term accredited investor and non-accredited investor. And basically what that means is you meet certain criteria set out by the government that gives you the ability to participate in real estate investments like this. So an accredited investor would earn $200,000 or more of personal income, or as a couple, $300K a year. Or it's not or you have a net worth of $1 million, not including your primary residence. So you could have stocks, bonds, cash, precious metals. You could have other properties, but you can't count your primary residence. So if you meet one of those criteria, then yes, you can participate in a real estate syndication like this, because generally, for the most part, most syndications when it comes to real estate are reserved only for accredited investors. And it's not the actual deal sponsor, the company, it's actually the government that sets these criteria and these rules. So if you don't meet the criteria, if you're not an accredited investor and that investment opportunity is only for accredited investors, well, syndication is not a good option for you because you're not able to participate. And I get it. Sometimes there's people who, they know real estate really, really well. They know what they're doing, but they're not an accredited investor. And unfortunately, that's just the rules. The government sets those rules. So if you're looking for an opportunity, you're not accredited, syndication probably not going to be a fit for you. But if you are an accredited investor, if you're a programmer, if you're a business owner, if you're a high-end salesperson, if you're a lawyer, a doctor, professions like this who have that high annual income, syndication would be potentially a great opportunity for you, because it gives you that cash flow, the stability, the appreciation, the tax benefits. But while you're investing through that limited structure where you're protected, there are benefits. But if you don't meet that criteria, it's really not for you. And unfortunately, you're not able to participate. So for the cons, control, that's a big one. It's illiquid. Your money's locked up for a long period of time. And then the prerequisites. Well, there are rules. There are certain things that have to be met for you to participate in a real estate syndication. So I hope that this helps. I hope this gives you an idea on what exactly investing in a real estate syndication is all about. And if you are interested in talking about potential investment opportunities, if you're interested in learning more about the syndication structure, what we do, just go to sethferguson.org/invest. sethferguson.org/invest. You can book a call with my team. We'll get on call. We'll meet each other, figure out, hey, could this work? Could this not work? What are your goals? What are you looking to do? And we'll see if it's a fit. If not, that's okay too. These are no pressure situations, and we're happy to point you in the right direction. So that's sethferguson.org/invest. Syndication, great structure. It's billions of dollars have gone through this. But you have to decide, hey, is this the right structure for your investments or is it not? I hope this video helped. See you guys next week.